Guys, how we doing? I'm Ryan Mack, welcome back to Trading Guys. You will see today I have zoomed in my screen using the settings, so hopefully this all looks even bigger for you. I've zoomed it in to 150%. It actually looks pretty shit for me, I don't like it, but I'm hoping that it looks better for you guys watching this on YouTube or Facebook or whatever. We're going to fly through this today, okay? See, that's what I don't like about it. You don't get the full thing, mate, but anyway, let's try it, right? See how it works. I'm just going to crack on, guys, because I am super busy. I've got an event to plan for. I'm doing another volcano with Ollie Ollerton from SAS Who Dares Wins and Jimmy Narain from Mind Valley at the end of June. And I just need to get everything booked today for this whole trip, and it's a bit of a nightmare. The first hotel that we'd planned only has rooms for the first 2 nights, and the second 2 nights they're like, yeah, we've only got 4 rooms, and obviously we need 9. So I was like, fuck. And it's peak Indonesian holiday season, so I was like, holy shit. Our assistant behind us is sorting the hotels, and we finally found one, but they're like, yeah, for those 2 days we've only got 11 rooms left. And I was like, oh, just fucking buy it, because we need 9. So yeah, little bit of a sweat on trying to sort this, but let's see what happens. Anyway, moving on. Remember, what we're going to do is write currency strength. You can write trades or whatever you want to write. Then you're going to write strong, weak, and then neutral. Okay, strong, weak, and then neutral. Okay, that's okay. There we go. Strong, weak, and neutral. The reason why we do that is we find out which economies are strong, which are weak, which are neutral. We ignore the ones which are neutral, and we trade a strong economy against a weak economy. That's how you decide. If you're like someone who looks here and you're like, oh my god, look at all these pairs. How the fuck do I know what to choose, to trade? Well, this is how you choose. You do it based on fundamental data. You find an economy that's strong, you find an economy that's weak, you match them up, and then you decide whether you're going to buy or sell it based on that, right? That gives you your reason to trade, that's why you would take it. So let's have a look. We've got to go to last week? Data we on? Yes, okay. So let's see what we've got. Realize that. Okay, sorry. Need to apply the filter. Last week. Okay. Oz, sticky. CPI year on year, so it's pretty sticky. I mean, Oz isn't really in a good way just now because of China, right? Official cash rate, they've dropped 25 base points. Bearish, massively bearish. I mean, it's better than before, but it's still bearish. It's minus 5.7. It's shit. Way less than forecast. It's a little bit bullish, but it's only month on month. Manufacturing PMI for China is bearish. It's getting slightly better. It came in as forecast, getting slightly better. However, it's below 50. Remember, that is bearish. Okay. Non-manufacturing PMI is 50, which is bullish, but it's getting worse. Okay. It's worse than forecast and worse than before. So things aren't looking too good. Now, remember, guys, before we go on any further just now, please understand. What you're seeing in the markets right now is absolutely fucking mental, right? It's mental. This is not your average stuff that you see in the markets. I don't know how it's kicking off in the background. This is not your average stuff that you see in the markets, right? Gold is an unprecedented high. Markets are just fucking flying, melting. It's all to do with this trade wars bullshit. Now, this has been going on since November. Not the trade wars, of course, but you had the whole initial market volatility up to November, from November onwards, about who's going to get nominated in, right? Who's going to become the next president? Then you had Christmas after November. You had Christmas in January. They are well known every single year. They're just shit months to trade. Markets are always shit, right? It's holiday season. Nobody cares. Blah blah blah. Then you come back. Then in February, then we had the inauguration. So it's like fucking hell, another crazy month. Then we've got March, April, May. It's just been fucking trade wars, guys. Like this is just. What's happening right now is just unprecedented, right? It's like you just need to ride the fucking waves and get it over and done with. I'm absolutely snapped because my method of trading is long based, right? I want to enter a trade now and leave it for the next fucking 10 weeks, 15 weeks, 20. I will want to leave that as long as I possibly can, okay? But it's quite hard to find a trade where I can do that right now. Let me just show you one thing. I was shown this as a lesson the other day, and I just want to show you the difference, right? So, Look on the weekly. Let me just see. Okay, right. Look at this. Wait, I'm gonna delete that. So annoying. Hold on. Right. Look at this here. This blue candle. Right. If we go on to the 30-minute time frame, I was actually showing guys the other day how you can trade. Look, I was actually showing them how you can trade this. Right. Look, bang, 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 and so on. Right. I was showing them how you can trade this. Now look at this. This is my method here on the 30-minute time frame, right? And look, that looks like a lot, okay? That looks like a lot. Right, look at it. It looks huge, right? You think, oh, bloody hell, there's loads to thing with there. But let's have a look on the, sorry, not the monthly, the weekly. Let's have a look on the weekly time frame. Look. Look at what my blue circle is. God, you can barely even see it. Look. It's this here, right? It's that fucking little blue mark there. So the way I look at the market is, do I want to trade this and get this stupid little fucking move, or do I want to wait? I know it's a pain in the arse, but do I want to fucking be catching moves from here to here or here to here, or do I want to just catch a candle on the weekly? You know, I don't want to be catching this tiny little move here, guys. I really want to be catching this. The reason why we didn't take that, it was against fundamentals, blah blah blah. But anyway, you know, these are the type of trades I'm looking to take. If you look on the 30-minute time frame, it looks good enough to take this, right? Look, but look at how shit it is here. It's only that tiny piece of this. My method catches this, right? Nothing wrong if you want to be a day trader, right? And you want to catch this. Shh, who's that? See, I bang it. If you want to catch this, you can catch this. Sorry, somebody's kicking off in the background. It's driving me nuts. If you want to catch this, you absolutely can, right? However, it's like 150 pips. 150 pips is nice, right? Let's just measure it while we're here. Let's just see, right? Let's just say you got in here, right? Because you're never going to get the top. Let's just say you go from here. So 142-ish. Let's just, right, so just say 150 pips, right? And then let's have a look on the weekly. Now remember, it's the same amount of risk. If I was going to enter that trade on the 30-minute, I'm still going to use 0.25%. You're still going to use 1% or whatever it is you use, right? I'm still going to use 0.25% here. However, you're going to get 1,344 pips for the same amount of risk. You see where I'm coming from? And this is why I do it this way, guys, okay? Just for a bit of insight there, I thought I would change it up a little bit and show you the insight and the reasoning. Yes, you need to wait a long time for my trades, because I'm a swing trader, but you take very few trades, but the ones that come in, they're very fucking profitable, lads, alright? And you only need, 10 of them a year, and you're good to go. I mean, you only need fucking 5 of them a year, but, you know, if you're greedy, 10 of them a year and you are good to go, alright? You'll make far more on those 10 trades over a year than you will doing fucking 10 trades a week, you know, snip, 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 and all that, you know, with much less risk, which is more to the point. Let's just have a look. Okay, so I'm gonna keep AUD at neutral for now, but it's not looking good. The AUD is not looking good. It's potentially, you know, it could potentially slide into the weak zone. NZD, I'm gonna keep NZD weak. It's getting some okay numbers and stuff, but overall the economy is still shit. Yes, if you're a scalp trader or a day trader, you will see strength right now on the NZD. So you're going to be watching my video and thinking, what the fuck is he talking about? NZD's weak. NZD's fucking flying. Yes, the NZD economy is weak. However, you have to take note that the market sentiment is still a bit risk off. It's kind of jumping into risk on. Then the next minute something happens that it's not part of the news. You know, like the bank fucking downgrading the US dollar and blah blah blah. It's like, oh shit. You know, nobody saw that coming. So then it then put the markets instantly back into risk off. So then NZD gets strength, CHF gets strength, Japanese yen gets strength. It's like, fucking hell, where is this coming from? You know? So that's why it's happening, guys. So when I'm saying NZD is weak, you need to remember I'm thinking about the whole bigger picture. I'm like, the economy is fucking weak. The economy is shit, right? Based on cold, hard data. Yes, get a couple of decent numbers, but overall, it's shit. And then the strength that you're seeing is micro. So mine is the macro, the bigger picture, you know, quarter to quarter, year on year. And what you're seeing just now is day to day, week to week type strength, okay? which is all just part of the normal market cycle. Okay, I just don't want to confuse you. What we got this week coming up? Overseas commodity prices year on year, we want to see that. Overseas trade index, yeah, we want to see that. It's anticipated to be up, which is quite good because New Zealand makes its money from like exporting milk, butter, meats, lamb and all that. New Zealand lamb's very famous. Current account, we want to see that. Cakes and manufacturing, definitely want to see that. Remember, China has an effect on AUD and NZD, but mostly AUD. If China's doing well, AUD will do well, okay? If China's numbers are coming in negative and bad, that will affect the AUD. That will come in negative and bad, okay? Good trades balance, kicks and services PMI. Yeah, we want to see all this, alright? Yeah, so I have got AUD neutral and NZD weak. Remember, that's macro. You might see some strength this week in the AUD, okay? It's just, that's the micro shit, okay, alright? Moving on. Now I'm going to do one pair at a time, which is going to be the CAD. Okay, last week. Current account CAD, 2.1 billion, it's still shit, it's still minus. So when it comes to current accounts, trade balance, blah, 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 when the current account's low, that means like people aren't really spending money in their country. So they're probably buying more shit from overseas and blah, blah, blah. And it's not adding to the current account. People aren't really shopping and so on and so forth. They're not stimulating the economy, right? And then when governments borrow, it puts the current account into a deficit, so that's not good. GDP month on month is slightly better. It's grown as expected, but remember, it's a month on month, right? So it's not really something that has a massive impact. We really care about quarter on quarter, year on year is the one that we really care about. This week we've got manufacturing PMI coming up today. We want to see that, but I mean, look, if it's below 50, it's going to be bearish, right? They are anticipating a rate cut. So Canada is anticipating a rate cut. Now, rate cuts are in general seen as bearish, okay? However, if it's already anticipated, i.e. forecast, and it comes in at 2.50, it's already what's called priced in. People will say, what do you mean priced in? Well, everyone's already thought, right, Canada's going to cut rates next month. So if everybody's already backed it, these institutions don't wait for the news to come out like us. They already lump in ahead, right, in anticipation. So if this comes in and it's 2.50 as expected, then nothing's really going to happen because it's already been priced in a month ago. However, if it comes back in and they do not cut rates and it comes back in at 2.75, or it comes in even more, or even less, sorry, at 2.25, something unexpected is the point I'm trying to make here, then you're going to see a big fucking reaction in the market, like, oh shit, because it was unexpected. But if it comes in at 2.50, even although it's a rate cut, and it's like, that seemed to be bearish, it's as forecasted, okay? So it's already priced in, the market probably won't really move that much, alright? Because it already done it last month, kind of thing. Trade balance, pretty shit. It's getting slightly better, but still pretty shit. IV PMI, below 50, shit, but getting slightly better if it does come in. Unemployment change, we do want to see that. And employment rate, we do want to see that, okay? Employment, very important. Unemployment, very important. If employment has increased, it means more people are in a job. If more people are in a job, it means more people are getting salaries. If more people are getting salaries, it means more people can pay their fucking mortgages, pay their car loans, pay their mobile phone bill, pay their Sky TV, pay their credit card bills, blah, 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 take their missus out for a meal, buy their kids a new bike, So all these things, you might think, from one thing, why is unemployment so important? Well, it's so important because of all these things. If people are out of a job, what does that mean? It means they're not going to be paying their credit card bill. It means they're not going to be paying their fucking mortgage. They're going to bounce on their mortgage payments. They're going to bounce on their car loan payments. They're going to bounce on their mobile phone payments. They ain't taking their missus out for a fucking meal. They ain't buying their son a new bike, So it has a massive knock-on effect, okay? And then unemployment being high is also not good because it means more people are out of a fucking job. All these people are gonna bounce, all the payments that I just mentioned, plus more, right? Plus be taking money from the government, So that's why it has such a negative effect, all right? CAD, I'm keeping CAD in neutral. Right, it's kind of neutral. I mean, you could argue the case that CAD is pretty weak. Let me just check how many weeks it's been neutral. It could be a few. Might be able to put this in week this time, because it is pretty shit. Wait there. Median CPI is stronger, stronger, stronger. Let's have a look at there's a curve. It's getting stronger, okay. So I can keep it in neutral for now. I definitely would put it in a strong, fuck that. But I could definitely keep it in neutral for now. Let's have a look. We've got a steady, balanced out here, okay. So if we start to see a more consistent increase again, then we could start to add to it. Let's see, core retail sales dropped. Retail sales month on month. Not the best. Corporate profits. Nah. Okay, so I'll keep it in neutral for now. Okay, it is quite weak, but I will keep it in neutral for now. And these are decent numbers. CPI is actually quite decent numbers. So, let's see. Last week, yeah, GDP a little bit strong. Oh, let's have a look at GDP again. The rate. Okay, nothing too special there. All right. Yeah, let's see what happens. I'm going to keep it at neutral, okay? Some could argue that it's weak, blah, 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 but I'll keep it neutral. Again, I will say this every bloody week. I don't know why we even bother looking at this. We've got retail sales, GDP, quarter-to-quarter, manufacturing PMI, CPI, unemployment rate. Now, when it comes to CHF, none of these things really affect it, whether you're going to buy it or whether you're going to sell it. The way to trade CHF is simply by market sentiment, risk on or risk off. If markets are risk on, then you'd be potentially looking to sell this, right? If markets are risk on, then you're looking to buy CHF. It really is that simple when it comes to CHF. There's a couple other little things, but not much. Pardon me. For that reason, I always just keep CHF in neutral, and I just trade it. In my mind, excuse me, I just either make it strong or weak. You know, from neutral, I either say, right, it's strong or weak based on risk on, risk off sentiment. Am I going to be buying it or am I going to be selling it? Okay. The reason for that is it is a safe haven currency. Euro. Let's have a look at euro. Come on, come on, come on. Okay. Bearish, bearish, bearish. It's came in better than before, but far worse than expected. It's still not good, but better than before. So you could argue it's slightly bullish, getting better. But it's a month on month, so who cares? French final private roll, quarter, bearish, sticky, bearish. Bearish, 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 bullish, bullish, bearish. Yeah. I still think euro is shit. Look at all this. It's all weak as fuck. I still think euro's shit. Core CPI, lower than anticipated services. Manufacturing, monetary. Yeah, I still think euro is shit. I'm going to keep it at weak. However, we have to remember we have to keep an eye on bonds. Bonds do play a significant role in the Forex market. So you may see all this week and then you might see euro flying up and be like, why is that flying? Yeah, probably because people are buying euro bonds because they're so cheap, right? What else we got coming up with the euro? One minute you get this kind of good news that you're getting like, okay, euro are now in talks with Donald Trump, blah blah blah, and everything's hunky dory. And then 2 days later, it's like, yeah, Trump said he's going to hit the eurozone with 50% tariffs, and it's like, for fuck's sake. So, you know, you have to remember, guys, what we're seeing in the markets right now is not fucking normal. Okay, it's not normal. I am pulling my hair out because it's very fucking annoying, especially for my strategy. However, you just need to have patience, right? If you don't have patience, you then start blowing your fucking account. You start chasing your tail. You start becoming a normal retail trader who gets excited, gets dopamine hits, starts losing money, starts trying to chase it back, you know? So, we don't do that. You want to build yourself to be a professional. Professionals just take a trade when there is a trade there. They don't hunt for something which isn't there, right? I was watching a podcast the other day. It was with Ken Chigbo. He's an ex-London trader and now does his own trading, just like me. Actually, he trades his own accounts, PAM accounts and stuff. And somebody asked him, and the thing, he's heavily fundamental like me and a long-term trader, and they were like, what was it said to him? Yeah, so what do you do then if fundamentals don't align with technicals? And he says, I don't trade. Simple as that. Unless both align, I don't trade, because then there's uncertainty, and it's about probabilities. It's about stacking the probabilities in your favour, and it's quite right. It made me feel like, do you know what? That's exactly what I do. So it was quite good. CBI realised sales. I mean, there's not much. Let's have a look last week. Pound is doing alright. So strong. Good numbers. Bearish, bullish, bullish. Quite decent numbers from the pound, what have we got? Tuesday, that was last week. Sticky. Nice sales nationwide. We've got bearish. Don't be fooled that it's green, because look, it was forecast to go in at 0 and it's came on much. In fact, that's bullish. Sorry, I'm talking shit. It was -6. My eyes saw that as 0.6. My apologies. It's actually -6. They thought it was going to go to 0, but it's actually went to 0.5, which is massively bullish. This, if it comes in, is going to be bearish, of course, below 50. Yeah, let's see. The what did I have? I had pound at neutral. I'm gonna move pound across to strong for now, because it is doing quite well, and it has been doing well for about 3 weeks in a row now, 3 to 4 weeks in a row. So now it's time you can move it from neutral over to strong, right? Because you're starting to see the consistent data. Okay. Now we'll move it across. What else have we got this week? Okay. We want to see all this, right? We want to see all this. Next, Japanese yen. The Japanese yen is in a very bad way. I mean, I'm just putting it as weak right away. Yes, you may say, "Oh, why are you saying it's weak, Ryan?" But when I look at it, it's going up. Yeah, it's going up. That's just because of market sentiment going from risk on to risk off. So when markets are uncertain, like I explained about NZD, when like the markets in the US are like, "Oh shit, what the hell is going on here?" and everyone's uncertain. There's no deals being made, there's tariffs and blah, all this other nonsense going on in the background. People get scared, right? They get scared to put their money into USD. So what do? They move their money into non-risk assets, essentially, right? Assets which don't have a lot of risk, okay? Which is Japanese yen, New Zealand, Swiss franc, and gold, okay? So if you see Japanese yen going up, and you're like, well, he says it's weak, why is it going up? That's why it's going up, okay? But overall, the economy is very fucking weak, and it's in shit state. And I think it was the bank, or the governor of the Japanese bank said, I think it was last week, he said they're almost at a critical stage. The same like Greece. Remember when Greece pretty much fucking collapsed, and people were only allowed to go and lift out €60 per day, and people are going to try to get their life savings, and they were like, nah, fuck off, you've got no money here, kind of thing. That's almost what's happening in Japan, guys. So I mean, look, yeah, capital spending quarter on year has massively increased. That's good. This is still bearish, but it's a positive growth. We need to see what the rest of it is. However, look, decrease. I know it's green, but it's because it came in better than the forecast. That's Bank of Japan core CPI year on year. That's increased. That's positive. Came in better than expected. That's positive. 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 It's sticky. Oh, excuse me. Bearish. Positive and bearish, right? So there's some decent news there, but that is no fucking reason to start thinking that the Japanese yen is now strong, right? It's just not at all. It's just a little bit of good news this week, alright? Capital spending, that's good news. That's getting better, right? We need to see more consistent news before we'd move it. So if you want to talk about this week, you could potentially say that it's strong this week, right? If you're a day trader or scalp trader. But overall, in the bigger picture, it's just weak, right? I'm only looking to sell the Japanese yen. I'm not looking to buy it, and it's got one of the lowest central bank rates as well, 0.50, which is absolutely dog shit. Okay. What's it going to do next? Okay. USD, last but by no means least. After this, I'm going to run through the markups, right? We'll have a quick look at markups on the technical analysis side of things. Final, sorry, let's go to last week. Okay, core good durable, okay, bullish, bearish, 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 bullish. It came in better than anticipated, but still bearish. Bearish. Sticky. So GDP price is sticky, okay, and that's quarter on quarter. That's good to know. Bearish. No, we don't care about that. Don't care about that. Core PCE is sticky. Getting better, bullish, but still shit. Personal income. Bullish and better than anticipated. Personal spending month for month is bearish. Bearish, bearish, bullish, bearish. It's just mixed data, you know, it's really, really mixed data. And it's been mixed data now for about a good 3 weeks, so I am actually going to move. When you incorporate this mixed data, it's got some good numbers, but when you incorporate the mixed data along with the risk off sentiment and people are scared to trade the USD, I'm going to put the USD as neutral. 2 seconds. What's that? Oh yeah. The happy saya, yeah. Sorry guys, 2 wee seconds. Try to book these bloody things at the same time. Okay, any choice. Sorry guys, this is welcome to a fucking day in the life, man. Honestly, I am non-freaking stop every single day. Okay, Bedulia. Okay. Right. Yeah, I'm gonna put you. I've been a big fan of USD strength, and I still am, but I just think just now it could continue to pull down a little bit until we get some more solid data and some more solid actual trade deals, not just like, yeah, we're gonna pause, let's just shake hands. Now, saying we're gonna pause is not a fucking deal. It's just saying, right, let's stop fighting each other just now and let's try to come to an agreement. But if they keep arguing, you can very easily, get what's the word I'm looking for? Mardy again, right? You can just start to flare up very, very easily. So there's still uncertainty there until they fucking shake hands, they sign a contract, and they have an official trade deal. Okay, so I'm going to move USD to neutral, and that is it. So I'm going to run through. I have got in the bigger picture, the macro. I've got strong GBP only, weak NZD, Euro, Japanese Yen, neutral AUD, CAD, CHF, and USD. Okay. What was I going to say there? Let's have a look at what Prime Market Terminal's got. Okay. Let's see what they've got. This is going to be for the micro, i.e. what's happening this week. All right. What's happening this? So USD neutral. There we go. Euro bearish. Yep. GBP bullish. There's 3 that we agree on. CAD bearish. Yep. I've got it as neutral. AUD neutral. I've got AUD as neutral. Yep. NZD bearish. Yep. Japanese Yen bullish. I've got it as weak, but they've got it as bullish. The reason why they've got it as bullish is, like I said, it's risk off sentiment. So even before we looked at this, it's exactly what I explained to you. I'm saying Japanese Yen is weak. However, today, tomorrow, this week, you might see it strong. It's because of risk off sentiment. Okay, where it's about money flows, money flowing from the US dollar into safe haven currencies like CHF and Japanese Yen and NZD. Okay, so that's why. But overall, please remember the Japanese economy is shit. Okay, CHF neutral, so they're pretty much alignment. Even though they're talking about the micro and I'm talking about the macro, pretty much 90% of that is actually in alignment with what I have just shared from you. And I was able to do that by simply understanding fundamental data, okay, and how to read this. I know it might seem a little bit complicated when you're watching my videos, thinking, you might be thinking, how the fuck does this guy know this? Honest to God, guys, I didn't know any of this, and it took me, when I got a mentor to go through all this 2 years ago, it took me about 4 to 6 weeks of practicing it, just each week. What I would do is, if he released his video on a Sunday, I would practice doing this on a Monday, and then I would watch his video on a Sunday, and I would see if I got it right, if my review matched his review. I'd be like, oh fuck, right, I never took that into account, never done this, and then I got better. And by the time I got to week 6, I was able to do it myself very, very fluently and very accurately, you know, until it matched. I had the same alignment as him, and you guys can do exactly the same. All right, it just takes a little bit of practice. People try and avoid fundamentals because, like, oh, I can't be bothered, because people are fucking lazy. That's why. But if you really want to be a trader, holding trades for a long time, daily or swing trades, you know, you just can't avoid doing fucking fundamentals. If you're a swing trader, if you're a scalp trader, I would say you don't really need to do this. Just focus on price action. All right. Now let's very quickly move on. I don't want to fucking mumble. Let's move on to, right. So I'm potentially looking at this, right? Boom, boom, and then from here, boom, boom, boom. Right. This is the kind of shit we're looking to see. Bang, 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 bang. Right. Potentially. Now, if it doesn't do this and it just keeps going, all you're going to see is this. Bang, 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 bang. Honestly, it's fucking as easy as that, guys. It as is easy. Technical analysis-wise, that's how it's going to fucking go, right? That's how it's going to go. Or here, what it might do here is, let me just show you another example. Right, you can cover it there. It might go like this. Boom. Boom, boom, right? You may also get that, right? Bang, and then we're going to enter it here. So just remember that, right? I'm just trying to clear up my screen a little bit, but at least you can remember what we're kind of looking for, okay? Let's just go to the top and work our way down. Come on, okay. Right, AUD CAD, both are really shit. So look, you're just getting this range, right? Look, it's just in a range. Nothing's really happening here, so I wouldn't be taking to trade this. I wouldn't be looking to trade this. Sorry. That's pretty shit. I would be looking to sell this all day long. However, you can't sell it because there's no value to sell there. You'd need a retracement, rejection, and then melt. Okay. I wouldn't be buying it because it would be counter trend, and the CHF is far stronger than the AUD, so I wouldn't be buying it. Right. What we got here? AUD Japanese yen. Both economies are shit, that's why it's just, you know, pretty messy. I think overall I'd be potentially looking to buy it, but I'd need to see this. I'd have to see it break above this area here, come back and retest, and then go, guys. I'd have to see that. AUD USD. Just now, you know, you could potentially buy it because of the whole risk off sentiment, blah blah blah. But look, I'd really looking to sell this. So I can remove this because that hasn't happened, just to tidy it up a bit. I'm either looking to sell from here, which I had, you know, I've had this marked up for weeks, or if it doesn't, if it just rejects from here, right, and just starts to melt, then all you're doing is looking for this, boom, boom, enter, boom. That's what you're looking for, right? Or potentially could even be that, right? There you go. That would then be your entry point as well. Okay, so you've got an entry point here, entry point here. All right, as simple as that. Anything outside of this, I don't fucking touch it. Right? I don't get FOMO because I don't touch anything outside those blocks. That's pretty shit. You know? Again, I wouldn't be touching that. Bugger off. 2 dog shit pairs. Euro AUD. Euro CAD. Again, 2 dog shit pairs. If I was going to be buying it, I'd be buying it from down here, as shown. Euro CHF, I'd be looking to sell that all fucking day long. However, there is no value to sell. It's an all-time low. Look, you can't sell from there. There's absolutely no fucking value. It's suicide. You want to be selling from here, or even better still, if it comes up and retests here, 1,000,000% you're entering fucking sales from here, right? 1,000,000%. But let's just move this across. Right, there we go. Okay, so that's what we're looking for. Or, obviously, if it breaks below here, boom, 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 right? I'm not going to draw that up because it's just going to make an even bigger mess in my bloody screen. Euro Japanese yen, look, it's two dog shit economies. So this is why I don't trade weak against weak, because this is what you get. If you trade strong against strong, weak against weak, neutral against neutral, this is what you get. When you trade a strong against a weak, so Euro was strong at one point, Japanese yen was weak, this is what you get. You get an uptrend. If Euro was weak, Japanese yen was strong, you'd get a downtrend. But because both of them are really weak and uncertain right now, you're getting this range, which is dog shit, right? So nothing to trade there. Euro NZD, both are absolutely dog shit. I would say the Euro has a far better potential to be much stronger than the NZD, but yeah, it's just so messy right now. You need to wait for something solid to come. Back down here, retest, even retest here would be even better, but potentially it's going to be here. Yeah, move that down. Boom. Sorry, they broke above. Retest, reject, and away we go. Okay. So again, there's still nothing there. Euro USD. You're probably still going to see some bullishness just now. It's just because of the uncertainty and the risk with the USD. I'm still really looking for sells, guys. Still, I mean, if this broke up here, rejected, came back down here, retested, and then went, I would then potentially be looking for buys, okay, at that point. But it needs to do that first. It needs to play out. So there's nothing as of yet. I would not be fucking buying this from here to here, no way. You want to be buying from here, not fucking here, right? Because there's no value. GBP AUD, again, look, it's actually playing out. Look, boom, boom, boom. It's actually playing out as we marked up, but there's no value. There's no fucking value to buy it, guys. Really, really, look, really, really shit pricing. Really shit pricing, so I need to see it really break above here, or break below, retest, and then go, right? It's just really, really poor right now, but it's definitely buys. I would not be selling this, okay? I would not be selling this at all. GBP CAD, again, it's buys. There's just no value to buy, so I'm just moving on. You need to wait for value. GBP CHF, look, it's just ranging. It's fucking dog shit, right? Again, there's nothing there. GG, again, it's buys all day long. There's no value to buy. You need a pullback. I really want to see it, you know. I don't really want to see it pull back here. I want to see it pull back here. Give us a liquidity grab below here. Boom. Little liquidity grab below the 200 EMA and then bounce back up. I would definitely enter it if it came down here, right? Bish, bash, bosh. Right, that'd be mega. Hold on. That'd be mega if it done that. Okay. But again, still nothing yet. GBP NZD, it's buys. You need to wait for it to pull, but either break above here and go, or pull down here and then go, right? GBP USD, I would be looking. How do I close that here? That's bloody annoying. Okay. As it stands just now, we're potentially looking for buys because of the whole risk on, risk off. USD numbers not so good. Pound numbers doing really well, but you can't buy from here, right? You need a pullback, guys. You need a pullback. So this is a potential zone right here, or this right here is also a potential zone. When you see it pull back, boom, and go. So again, not quite ready. Same again, bullshit. NZD USD, you're going to be selling this all fucking day long, but I want to see it come up and retest this zones first, and then enter the sales here or here as marked, right? Again, there's still nothing yet. NZD CAD, both of them are shit economies. That's why you've got this. You know, you've had this since fucking 2024. Really shit economies. NZD CHF, dog shit. I would be selling this. However, the thing is, both of them are risk off economies, so both of them are getting money pumped into them at the same time, you know, and that's why you're just getting this little very slow mess. It's not worth trading it. Just because you could make a bit of money on it doesn't mean you have to fucking waste your time, right? NZD Japanese yen, two dog shit economies. Two dog shit economies, plus both of them again are two risk off economies. So both economies are shit, but both economies are getting money pumped into them because of risk off. And you're just getting this bullshit movement, right? It's not worth trading, guys. You need to know what's worth taking a trade and what's not. It's like if you go and buy a car, right? If you just go and buy a car and you have no fucking idea what you're talking about, and you're like, oh, can I see underneath the bonnet? And the guy lifts the bonnet and you're looking at the engine, you're like, oh yeah, it looks good. but you really don't have a fucking clue what you're talking about. Do you think you're going to get a better deal on that car, right, than a guy who's a fucking mechanic and he hasn't let on to the car salesman that he's a mechanic? He's like, yeah, can you lift the bonnet please, let me have a look, mate. Guys like that. Oof, head gasket's fucked, I can see it. Time belt's almost about to fucking go, right? You've got that upper hand. He can choose if a car's good or not because he knows what he's fucking talking about, right? That's what it's like in the markets. When you know what you're talking about, you can pick and choose your trades. You don't have to, you don't just sit there fucking like a machine gun taking everything that moves, right? Blasting all your money, blowing all your fucking accounts and blaming everyone but yourself, okay? Trading will show you far more about your own personality than it will any other job on the planet. I'm telling you right now. Yeah, this is potentially going to come down here. Boom. I'd still be looking for buys all day long, but we just need to let it finish its move, right? We need the markets to be more risk on, oil to be shit, which it still is, and that's pretty much it. Yeah, I've been looking to buy that. I just can't buy it yet. USD CHF, look, even marked this previous support. Once broken, becomes the new resistance, right? But it's really just moving because of risk off sentiment. It's not a good trade, right? It's not a good trade. USD Japanese yen, I would be looking to buy this. Obviously, just now, you're probably going to see it break down and come lower, right? You probably will see that. It's just because of risk on, risk off sentiment. Okay, look now, look, it might even come here. Okay, I just don't want to keep marking up every 2 seconds on my page. But I personally would not be selling this. I would only be looking for buys when the time is right, okay? Oil. For me, oil is still massively bearish. Yes, you know, you could potentially take a buy right now. I would not, because look, previous support, once broken, becomes what? Becomes the new resistance. Bish, bash, bosh. And it's still massively bearish right now. I'd only be taking buys if it breaks above, comes back for the retest, then I would enter, and then it goes, right? It has to do that first, or I'm not fucking taking it. Gold. I just wouldn't take anything other than gold buys just now, as you can see. Boom, boom. You know, I just would not be taking anything other than buys. Not really. I mean, yeah, if you were scalping this, it's great. Same again. Look, comes in every time. Boom, boom. Liquidity grab, breaks above, comes back, retest, away it goes. Fucking superb. So I entered here, cashed out there, and away it goes. Sorry. Yeah, I would only be taking buys, guys. I would not be taking sales on gold. Silver. Silver again is kind of the new gold. I'm only taking buys. I'm not going to buy it from here. Look, it's an area of resistance, so I'd be waiting for a pullback to enter and then go, right? Copper, same again. I need a pullback, guys. I really want to see it pull back and retest this zone. This is my favourite. This, if it breaks above, comes here, I could do it. For buys, I want to see it retest this zone here and then go. Right, that's it. I'm not going to bother with indices and all that shit, right? Look, when they've all hit miles away. Bond, let's have a look at bonds, 10-year. Potentially come down. In fact, let's have a look at the DXY quickly. Yeah, it can still come lower. Like, I personally think it's probably going to come to about here-ish and then start giving us the up, right? But again, if it breaks that, then it's just going to do this, okay? So we need to be aware that both can happen, alright? And look, it can even fucking come down to here, okay? So let's just play it year by year, step by step, alright? Guys, I'm Ryan Mack, welcome to Trade Guys. Thank you for watching. I hope you find this information useful. I know sometimes it can be a little bit overwhelming if you are a new trader. That's totally fine. You have to bear in mind, right? See, social media has made trading out to be this fucking luxury game of gambling where you can just make big money with a fucking 20 pence in your account. It's not the case. You have to remember, the people who do this, who are actually traders, they are all people, pretty much 99% of them, all have a degree in something like mathematics, computer science, economics, fucking physics, you know, astrophysics and all this other shit. And then after they get their degree of 4 or 5 years, whatever it's taken them, they then apply to the London School of Economics, which is one of the fucking hardest schools you can get into, unis you can get into. They turn down fucking everyone. You normally need to have a kind of contact inside, or just be someone who is naturally smart as fuck to get accepted. Then you get in, and then they do a master's degree over that year in economics to then become a fucking trader. All right. So if you think you're just going to jump on, copy a couple of trades and become, make fucking enough dough to pay your bills overnight, it's just not going to happen, guys. I'm not blaming you for thinking that. I'm blaming social media and all these fucking morons. If you're not willing to put in the hard work, you will not make a lot of money. Anybody, I stand by this, anybody can learn how to trade, right? Whether it's scalping, price action, fundamentals, fucking swing trade, whatever. Any of you can learn how to do it, but I'm telling you, you're then going to, let's say it takes you 6 months to learn it, be like, right, I've nailed this strategy, right? It can take you 1, 2, sometimes even 3 years to master your own personal emotions and your psychology when you are in a trade, and that's what fucks people up. You will potentially get to a stage where you keep fucking it up, you keep being greedy, you keep over trading, you keep over risking, you keep blowing accounts. You will get to a stage, whether that's after blowing one account or after blowing 10 accounts, where you will sit and look at the mirror and say to yourself, right, that's it, this trading's a load of shit, this trading's a scam, and you're just going to fucking go off on a tangent. You're going to blame everything but yourself, and you're just going to quit on trading. Or you're going to become person number 2, where you're like, I'm a fucking idiot, you have full accountability on yourself, I'm a fucking idiot, what am I doing? I need to stop chasing the fucking markets, I need to stick to my strategy, I need to stop over trading, I need to stop over risking, I will become a trader if it fucking kills me, right? And then you're going to go on and you are going to make it, I'm telling you. People go off 2 paths. They either fucking quit and wrap their tits in because they couldn't go over their emotions and psychology, or they have full accountability. They realise it's the only person they can blame about trading is themselves, and they wish to progress from that, okay? That's the only 2 things that happens in trading, guys, right? And 98% will become person number 1 who just quits. And there's nothing wrong with that. I'm not slagging anyone that does that. It's your own personal choice. That's just the way it goes, right? If it was easy, everybody would be doing it, right? Yeah, that's pretty much all I have to say. Remember right now, if you're having a shit time, markets are fucking shit, guys. They are really, really bad. It's not your fault, okay? So just ride the storm, ride the wave out just now. Get through the storm, and we will come back later when the markets are good, and we will trade it, and we'll make some big fucking dough with very small risk, okay? See you soon. Take care.